recording now. Hi, Andrew, and thank you again for coming on to the Abundant Culture Podcast. We are super excited to have you today because we talked a couple weeks ago, and I was really excited about our conversation and your story in real estate. But before we jump into the real estate side of the podcast, we have to ask you, what is your backstory? How'd you get into business?
Well, I'm excited to be here and appreciate you guys having me. How did I get here? I live in Austin, Texas. I grew up here. I went to UT, got an advertising degree, and kind of was on a path to be, the VP of marketing at some big company or run an ad agency. Lived in Minneapolis. We were joking, kind of comparing Midwest weather stories. Lived in San Francisco. In 2007, my dad had a big stroke. And so I moved home back to Austin and basically came to help take care of him and just kind of stayed. And that was a big pivot for me in my life. I was 27 and had a bunch of time hanging out with him in the hospital, and, in the process kind of ended up quitting my job, realizing like, okay, what do I do now? Maybe the path that I was on, I don't want to be on anymore. I want to create some flexibility in my time. I want to be able to help take care of him. At the time, I wasn't married, didn't have any kids, but I was like, I don't want to do this sort of 60, 80-hour work week like for somebody else. So that's kind of what got me interested in real estate. I had a good family friend who was a realtor that owned a handful of duplexes, and kind of had said, hey, you should give me a book, Gary Keller's Real Estate Millionaire Investor. And also said, hey, I'll help you, here's buy a place next to one of mine, introduce you to the right people, the contractors, et cetera. So I started buying duplexes and fourplexes, and got pretty active doing that, enjoyed it, realized it wasn't that difficult, but it was a lot of fun. And you saw the metrics and the returns. And about 5 years ago, pivoted into start doing larger deals and started raising money with outside investors, just because I felt like we had a lot to offer, and you could scale more that way. And that bigger properties, frankly, just were more efficient, had better return profiles than sort of 4 unit at a time. And so that's, I guess 13 years after my dad had his stroke, kind of how I got to, you and I talking today.
Awesome. So what made you, I guess, what are some of the reasons? Because I think a lot of people, they get into real estate and they start leveraging those smaller deals. But then you hear like people go from doing 4 units to now they're doing like 100 units at a time and whatnot. Mm-hmm. What was the pivotal moment where you realized where it's like, oh, why don't I just do bigger deals, and why don't I just start raising capital from investors? Because for some people that seems like such a large jump, and they might not necessarily know or think that's realistic for themselves. So what was that kind of pivotal point where it's like, oh, I could go bigger,
Yeah, I mean, it was really my wife kind of urging me, pushing me to do it. So we had she and I, we had not raised any money. We had about 75 units. I had a full-time job. I think we had 2 kids at the time, and it was over a holiday break. And she just said, look, you're just kind of miserable to be around because you're working a full-time job, but we've got this real estate portfolio, and clearly you're more passionate about that. You're working on that every night till 2 a.m. I'd kind of talked about doing the larger deals, and she said, look, go do it. Like let's go figure out how to make that happen. And so it was really kind of, I certainly didn't buy my first duplex with the idea like, gosh, I really got to figure out how I can go raise, millions of dollars and buy these big apartments. I didn't know that was possible. But it was kind of her pushing me along a little bit and just saying, look, this is clearly you're passionate about it. And it's fun, and you've got this energy for it. You hate your day job at this point. It's just kind of in your way. Let's go give ourselves give you a year to go see how that works. And so it was really kind of her support and pushing me to go down that path. And I had certainly seen in our portfolio, we had duplexes, fourplexes, we had a little 8 unit, like the bigger the property, the better the returns were, the more efficient they were, 1 roof, 1 parking lot, all that stuff. So I sort of, it made sense, but it was kind of her urging that really led me down the path of exploring it and figuring out how do you raise money, and who do you talk to people, and how do you go buy a 200 unit apartment?
Absolutely. So could you shed a little bit of light on like, in your opinion, what's the difference between the traditional real estate investor and an actual real estate syndicator? Because I feel like both terms get thrown around a lot. And I just wanted to know from you, are they the same thing, or are there like some key differences that people should kind of know of? Because maybe a lot of people don't know what a syndication actually is. So could you explain the differences between the two and what a syndication actually
Sure.
is?
Yes, I mean syndication is a broad term, and it's not just real estate oriented. It's basically just think it's a group of people, a group of folks coming together to partner. So people, you can syndicate anything. Group of friends buying a fast food franchise. Like, so it's not just real estate. I think obviously in our world, my world, that's what it's talked about a lot. But it's just a syndication is a group of people, kind of joining to forces. I think real estate investor could mean a lot of things, right? And I think that's one of the fun things about real estate is, when I'm sitting down talking with people, whether they're investors or advisors, like, well, what's your goal? What's your strategy? My brother is a real estate investor. He has no interest in syndicating. He doesn't look at return metrics. He doesn't look at what's my IRR. Like, in his mind, he has a cash flow goal that he wants to hit every month. So it's like, if I can produce X amount of income every month, I'm done. I'm totally financially free. And so he's not, he wants to pay down his properties. He's not looking to kind of lever up and look at cash on cash. He's like, well, how much free cash flow do I make? And so, but he's an investor, right? And you got every flavor and variety of a real estate investor. Obviously, we've got a bunch of passive investors that are coming to our deals that are super happy in their day jobs and, have extra income, and they want to diversify to the stock market, but they're not interested in, the brain damage of going out and trying to find properties, or they recognize they want to be in a larger deal. They just want to be passive. So there's so many different flavors and varieties of what an investor is. I think, real estate syndication just means there's a group of people that have come together. You got a sponsor, somebody like us, who's kind of running point, the day-to-day operations, finding and identifying the property, putting the structure together, and then inviting, friends and investors to come be a part of that. And they're more of a passive investor, we're the active kind of general partner. That's kind of how a real estate syndication comes together.
Awesome.
Great. So how did you scale to over 125 units? Like, what did that process look like?
A lot of faith and just hard work. I mean, the first deal that we syndicated was 192 units. It was about a $6 million equity raise. And it was kind of a year process. So I think from the time that my wife kind of gave me the kick in the ass and said, "Hey, you should go do this," it was not quite about 9 or 10 months before we closed on our first large deal, which was a 192 unit deal in San Antonio. And so that was kind of the first big deal. And it was in that 10 months, it was 5 meetings. I had a goal of 5 meetings every single week, with like sit down, face-to-face, coffee, lunch, whatever, telling people what we were up to, hey, this is what I'm going to be doing. And then leveraging the story that I had with, the 75 doors that we did have. This is what I've been doing on the side and been buying these things. Here's the return profile. We're going to take that same business model. Now we're going to go apply it to larger deals. Would you want to invest in something like that? And kind of making sure that we were going to be able to raise the money and that we could put the equity together. We spent a lot of time, meeting the right brokers that operate in that, 100 plus unit space, 200 unit space. It's a different set of people than the ones that are kind of typically more residential brokers that are selling, duplexes and fourplexes. So it was a ton of work. And, back to her kind of urging me like I was passionate about it. I mean, I was working, all in 60, 80 hours a week just on that, meeting with people and talking to people and underwriting deals and, everything, insurance. I mean, just think of all the different components it takes to go put a business like that together.
Mm-hmm.
Absolutely. So could you walk us through so when you are looking at deals, what are some of the things that you're looking for? Because I feel like, I'm kind of in a private equity space, and I look at businesses kind of like you look at multifamily real estate, and I actually kind of pivoted to that from real estate using some of those skills that I learned in multifamily from a lot of my friends who are like a lot bigger in the space. But I think every investor has this thing that they look for, where like when they see it, it's like, yeah, this looks promising. So what is that for you?
Yeah, I mean, to your point, I think it's it's whatever you want it to be. And I think the big thing you got to do is you got to be focused. You got to have what are my criteria, and who am I as an investor? Who are we as a firm? So I think what we're very clear on is we have two markets that we focus on, Austin and San Antonio. I was born and raised in Austin. San Antonio is 70 miles down the road. We think they've both got great population, demographic trends, rent growth, all those things. But within those two markets, so we don't deviate outside of those two, first off, which eliminates a lot of noise. And then we don't deviate outside of, kind of the suburban core market. So I'm not going to go look at something that's 30 minutes, in Killeen, for an example, because that's not our market.
Yeah.
And then we're looking for, kind of class B plus better assets. So if it's a, early 1970s C-class deal, we don't waste our time looking at it. And I think we're very clear with our message to the brokerage community and kind of who we are, what type of deals we look for. So they don't send us stuff. We don't traditionally buy brand new Class A stuff. So they're not going to send me the new construction deal downtown, because that's not what we've bought. And they're not going to send us the C-class deal, because that's not where we are. We really like B plus class assets, kind of suburban markets, because we feel like it's resilient. You got a good professional tenant base. It's proved to be pretty true during the the pandemic here, and kind of the tough times. People are paying their rent, but you're not trying to get top of the market rent. So just being very focused and clear on what's your criteria, and you can sort of self-select out of a lot of the noise that way.
Absolutely.
So since you guys only look at those markets, like, do you guys ever run into like a shortage of inventory, since you're like super specific on what you want?
Not really. I mean, I think we've always got a handful of deals that we're kind of looking at or evaluating. I think some of that goes back to what we want to do and who we are as a company. Our goal is we're super small and lean, kind of boutique shop, and we want to stay that way. So we're not trying to have 50,000 units in an office space with 50 employees. If we do 2 or 3 or 4 deals a year, that's great. And we want to make sure that they're good deals, that our investors will feel good about them, and they're stuff we believe in. But between those two markets, I think they're big enough and active enough that there's always stuff you can look at, and we're never really out of a shortage of stuff to look at. Not some of it doesn't make sense, but there's always stuff that's out there to look through.
Absolutely. And when it comes to, since you're a syndicator and you do have passive investors in some of the deals that you're doing, what are some of the key metrics and things that they as investors look for based off of what they've told you or what you found out in your process of actually raising capital?
Yeah, I think it's different for different people. Similar to how we have different criteria for the types of deals, I think every investor has different goals. When we first would meet with an investor, I ask them, what are their goals? What are they looking for? And I'm very clear about, who we are and what we're looking for. And I'll tell people a lot of the times that, hey, you probably won't see the highest marketed returns from a deal with us, because we're focused on quality. We're focused on, good locations, and everything's risk adjusted. So if you could go see a 20% IRR deal in a different market, and, rougher tenant base, et cetera, or, ours might be a 10% or a 12% return. You've got to decide how you evaluate risk, and kind of what you're looking for. Are you more cash flow oriented, or are you looking for kind of an equity multiple, in 5 years? So I think we try to have a very open, interactive conversation and get to know our investor and kind of what they're looking for, but also are very clear in, the types of deals we're looking for and what we think that generates. And we think, Austin-based deal with what we've got going for us here in the market, if you can get a 12% IRR is a very safe, secure type deal. And there's been a market for that. I think there's plenty of investors that like that, and it's still a really good return. And, so I think it's just being transparent in what we're looking for, and then kind of identifying what you're looking for as an investor.
Yeah.
Mm-hmm.
And I really like that about you too, because I feel like in the syndication space, I would imagine, I haven't been in it long enough to really know, but I would imagine that it's really simple to sometimes get commoditized down to just, oh, there's this IRR, there's this IRR, and we're just picking IRRs, as opposed to saying, here's our actual product that we offer, here's why it's different from maybe that 20% IRR, and this is what we do. And if you are the type of person that resonates with that, then you can be a limited partner with us. I think that's a really, really good standpoint, because even earlier on in my career, I was always looking for the best IRR. But you can have a really good IRR. That doesn't even mean that you're going to actually raise money on that deal. Because I've had deals where it was like, it was like excellent, return. And it's like, for whatever reason, couldn't raise money on it. And that's honestly, a lot of times it's because the product was just crappy. And it was like a lot more risk there than most people were willing to take. So I think it's really good that you just know what your investment thesis is, and that you have the ability and the discipline to actually stick to it.
Mm-hmm.
Yeah, and I think we certainly talk a lot about risk adjusted returns internally and with investors, and I pose a question a lot to people that said, hey, you could have a 10% return deal in Austin, or you could have a 20% in pick a market, a tertiary small town, no growth.
Yeah.
Which one feels better? Like 20%, to your point, that there's inherently more risk if somebody's offering you a 20% return. It doesn't mean it's bad, and it might work, and you might make twice as much money, but you're probably taking twice as much risk, if not more. So I think it's just being open and honest about it. And to your point, I think we're very clear with kind of what our thesis is. And I just feel really lucky that I was born in Austin, Texas, and it's turning out to be like the best place to be investing in the country.
Yeah.
Yeah, we hear that the Texas market is like a huge hotspot.
Yeah.
So like, what else? I know you touched on a couple things that makes the Austin market good. Can you touch on that a little bit more?
Yeah, I mean, I think if you look at Texas at large, it really, most of the population is what they call the Texas Triangle. You've got Dallas, Houston, and San Antonio, and Austin's kind of right in the middle of that. And it's something like 60% or 70% of the population of Texas is within that triangle. The trend is, I think, between now and 2040, that population is supposed to double within that. And I think, for a variety of reasons, I think you kind of see the general migration south to the warmer states. It's kind of, they talk about the smile of the U.S. You got kind of Arizona, Texas, across the southeast up to the Carolinas. So those are kind of a lot of your usual hot spots. If you get into the real estate syndication space, you'll see people operating Carolinas, Atlanta, Florida, across the southeast into Texas. It's a business friendly state. We've got no state income tax. Obviously, that's driving a lot of businesses relocating here. And people follow jobs. It's got good warm weather. And it's just good quality of life. I think we've been blessed with a ton of land, so you can come and get we're not landlocked in any way. The cities can keep growing. We can get more dense. We can spread out. Certainly in post-COVID, I think that's been a lot of the conversations about, being able to get in places that aren't quite as dense.
Yeah.
Where you're not just living right on top of each other. So I think you got a lot of that going for it. And then I think Central Texas specifically, it's kind of a unique thing. Is they call it the blue dot in the red ocean. As far as Austin's kind of a pretty progressive liberal city. It's surrounded kind of by a more conservative thing. And I think really, no matter what your sort of political persuasion, that kind of provides a nice balance. Is nothing's too extreme one or the other. You got friends that are both, sitting on both sides of the aisle, and everybody's, kind of open to having conversations. And it's just been growing. And I think it's the momentum. It carries forward, and other companies move here, and then they want to, the talent base comes, and so the next company moves, and it just seems to be snowballing.
Yeah.
Wow, that sounds wonderful. Now you have Texas on my radar.
Yeah. Plus with the no state income tax, it's like, Texas doesn't sound bad at all. Like,
don't come in July though. We were talking, it's 105. You want to visit in like October.
Oh yeah, we'll still have our second crib up here, somewhere, because it's like, because I don't want to be there in July and August at all. But when it comes to being a real estate syndicator, what do you feel should be somebody's first step into doing that? Because on this podcast, we like to talk about what's the first step, because usually that's the hardest step for a lot of people. So what is the first step that somebody should take in order to be where you are or do what you're doing today?
I think the first step would be really making sure you really, really want to do it. I mean, it's really hard and it's complex and complicated, and there's a lot of responsibility. You start, taking other people's money. I don't think you want to half-ass that, so do
Yeah.
you really want to do it? And then you can start asking yourself other questions about, can I raise the money? Where's my skill set? I think something that not enough people talk about is it's a team-oriented business. There's a lot of different hats you got to wear. You need an operational hat to operate the deal and stay on top of the details and the asset management. Well, it's a completely different skill set to market yourself and get out and raise money and, underwriting deals. So it's a varied business with lots of different needs. So I think you need to understand like who you are, what your skill set is, and where you sort of need to find partners that can help you. But are you really into it? I think too many people just try to do it sort of on the side.
Yeah.
And I think it's going to make it more challenging to raise money. It's a question we get a lot is this your full-time job? So, absolutely. It's been my full-time job for a long time, and this is all we do, and so I think it's not something you can just sort of half-ass. So I think the first step is it something you really, really want to do and commit to?
Absolutely.
Yeah.
And I really like how you position real estate syndication as a business. That's not something that I hear a lot of people do, especially when they're first getting started. And that's what I'm always interested in. It's like, yeah, you might be able to buy an apartment or two, and that's great, but can you run the business of being a real estate syndication? Can you actually run the business of owning these apartments? And I think that's a big difference between the real estate syndicators who are highly successful and those who, kind of like you said, just do it on the side.
Yeah.
And you can spot that difference for sure.
Oh yeah, absolutely.
Yeah.
So what advice could you give for someone that like hasn't ever raised capital before and they're like going to pitch their first investor?
I think it comes down, what's your story? My background, I've got an advertising undergrad. So I'm always talking about like, what is your story? For me, when we get started, my story was I had 75, basically single family, duplex type rentals. I've been doing this. This is what I'm going to, seen in my own life, and we're going to make a transition doing it bigger. That was my story. Part of my dad getting sick, like I certainly would never want that to happen. I didn't wish that he had that happen, but that becomes like why I got to this point. So I think it's kind of crafting, why are you into this? Why are you doing this? And then why should I trust you? Why should I believe you? And, you don't have to have a big, long real estate track record to do that, but you really got to put yourself in the investor's shoes. If you don't have a long track record, why should I believe you and trust you and give you, $100,000? So what's kind of the story and why you're getting into this, and really being crisp in that message.
Mm-hmm.
Absolutely. And I definitely agree.
So yeah, I think our story probably helped us more than we even know when we first got into business and real estate. So yeah, I agree. The story is like huge.
Yeah.
I think particularly if you're investing, I think most people, when they're using the term syndication, you're investing from individuals, right? You're getting money from people that you're not going to institutions. So you're connecting with people one-on-one. They need to like you, they need to trust you. And so your story could be a lot of different things, but it's not just going to be about the metrics. I think we talk in our deals a lot about making sure they understand who the team is. So you're investing with us, and when shit hits the fan, how are we going to respond and react? And is it our full-time job? And what systems do we have in place to make sure we're being a good steward and shepherd of your money? So what's the team? Yeah. Then you've got the market, and then you've got the asset itself. But I think for most people in a syndication, the most important piece is the team. Who am I investing with? Because you could pick, 10 different people that are syndicating deals in every single market. And the assets are kind of going to be similar. So who's the team, and why do I believe them?
Yeah, absolutely. So in your opinion, you've given us so many golden nuggets to really take away, not only just for our audience, but also us as well. And that's one of my favorite parts about having a podcast. I always tell people, if you don't learn a lot, that sucks, but I do. So it's like, I definitely do. So what, in your opinion, what is the number one takeaway you would like anyone to really get from this episode?
I think it's if you're thinking about being a syndicator, you want to get in that space, making sure that it's something you really, really want to do. And maybe that's a selfish message, because I feel like there's a lot of folks that do kind of half-ass it, and it makes it more difficult for everybody that's doing it sort of full-time and treating it like a business.
Yeah.
That it's really hard. And it's a lot of hats you got to wear. So make sure you really want to do it and treat it as an important job, because it absolutely is.
Absolutely.
Yeah.
And there's nothing wrong with saying you don't want to. You know, I feel like syndication has gotten really popular. And there's a lot of people that are out kind of saying, doing it. And, you know, it's not easy, you know, so there's nothing wrong with saying, it's not for me, I don't want to do it. You know, like there's other ways you can be involved. There's other ways that you could kind of go build your own business that frankly might be a lot easier if you're not really passionate about some aspect of this business.
Absolutely. And to that point, I really, really like that you said that, because I had raised capital for a deal in Jacksonville, Florida. And in that process, I just realized that there's aspects of real estate that I really, really do love. And I know that it needs to be part of my portfolio. I mean, it's one of the best ways to build wealth. But at the same time, it's like, I really had to really dig deep and ask myself, do you want to be the guy syndicating, going out there, finding deals, putting the deals together and blah, blah, blah. And I was like, no, like I don't. But to our audience, just know, like, I had to make that same decision myself. And if you're that person who know that you don't want to put deals together, like, you can always still be a limited partner and or a capital raiser if that's something that you're good at. And that's really my plan for real estate, is just leveraging guys like you who are really going at it full time and say, hey, you know, I got investors over here. You mind if I bring some capital? Or, hey, I got some capital set aside. You know, could I put it into your next deal? And that's really my way into real estate. But at the end of the day, I could have just kept faking it like I wanted to do that. And I would have just ended up probably hurting myself in the long run, you know? Yeah. So that's a really, really key takeaway, in my opinion.
Well, there's a lot of roles. I think, you know, something that in our business, you know, my business partner, he doesn't love, it stresses him out to raise capital. Like he's like, it's stressful for him and it's energizing for me. I like talking to people. I like telling the story. I mean, that's my kind of marketing background.
Yeah.
I'm not detail oriented. I'm not a good asset manager. That's his strong suit. So it's sort of naturally, organically fit. And I think if you are wanting to get in this space and again, recognize like maybe you're an Excel wizard, you know, like you're going to be a damn good underwriter. Well, that's a necessary component of the business.
Yeah.
You need to go find and partner with somebody who can raise money. Who can, you know, get awarded deals and build the relationships with the brokers, because again, it's a lot of different hats you got to wear and not everybody's good at everything. So recognize the things you are good at. And I think inherently the stuff you like to do are the things you're good at. And if you can marry those two, you're going to be a lot more successful.
Absolutely. Yep. Agreed.
Totally agree.
Yeah.
So you're on the Abundant Culture podcast, and we love to ask every guest that comes on, how do they spread abundance?
I think for me, it's trying to be really truthful and honest and transparent with our investors and with, you know, kind of our business, you know, like this, to your point, this is a great wealth building tool. And so, you know, my hope is that by freeing people up, creating wealth for them, you know, you don't know where that's going to stop. You know, like everybody can go and invest in the things that they want to and spend time with their friends and family, give back to their nonprofits. So you really view this as a vehicle to create a lot of avenues for people to just, you know, be flexible in their time. I mean, I think for me, we kind of like live by a life by design, as we call it, and, you know, be where we want to be. And that allows you to hang out with your kids, you know, go volunteer at their school or go, you know, volunteer at the soup kitchen, whatever it is that you're into. But I really think you can do that when you have financial freedom. And so I kind of view that's one of our goals, is to help people create that so they can then go, you know, live an abundant life.
Absolutely.
Yeah.
I definitely agree. So this was definitely an awesome podcast on real estate investing, and not only just real estate, but the business of investing in real estate and being a syndicator and all those different types of things. So whether somebody wants to interview you because you interview well, or if somebody wants to invest with you because maybe they have some capital set aside and they want to get into real estate, but they're like me, they don't want to do all that work. Regardless of why they want to get into contact with you, how would somebody in any of those realms actually get into contact with either you or your team?
Yeah, I would love to talk to anybody. I mean, that's again kind of where I get my energy, is talking to people and helping advise them if I can, or give them an opportunity to invest or whatever it is. Our company, it's Wildhorn Capital. The website is wildhorncap.com, and my email is just andrew@wildhorncap.com. We've got, social media presence on all the platforms, but probably easiest way is just to send me an email, and I'd love to connect.
Awesome.
Well, thank you again, Andrew, so much for this podcast episode, because like Joe said, you provided a wealth of knowledge, and this was super practical, and we don't get tons of practical episodes all the time on the podcast. So this was awesome, and we thank you again.
Well, thanks so much for having me, and I really enjoyed it.
No problem.
Talk to you guys soon.